Good afternoon, everyone. Welcome back to the daily stock market update video where I do price action analysis and keep things simple. As well, I'll be giving you guys support and resistance levels to potentially play off of and the most likely scenario where the stock will be heading, and as well as the psychology and analysis behind the patterns so you guys can better understand and learn about the market. So we'll be looking at Sp500 as well as QQQ and the 7 mega cap tech stocks: Tesla, Nvidia, Apple, Amazon, Google, Microsoft, and Meta. And so recently I have just monetized my channel, and if you guys like to support the channel, feel free to join the YouTube membership on the channel, and I will be doing a every Sunday video now for members only, and that will be just an analysis on the market where we do a long-term outlook. So we will be looking at the weekly time frame, so as well as the monthly time frame, so we can get a better understanding of where our investments and our long-term portfolio will be heading into later in the year, as well as next year. And we'll also be doing overviews of the macro and do like a weekly review every Sunday. And I'll be doing 5 top picks of requested stocks. So for example, if there's just 5 of you guys and you guys pick 5 different stocks, then I'll be doing all those 5 stocks in the videos. And if there's more of you guys, then we'll just start doing votes. For example, if AMD gets more votes, then AMD will be one of the top 5s, or Netflix, or whatever stock you guys pick. Whichever one gets the top 5 votes will be in the video every Sunday. So for those of you who join early, and you'll be likely getting your ticker in pretty much every week. Take a look at those memberships and feel free to support the channel. And let's get started. So we're looking at QQQ on the daily time frame. So yesterday, you guys know how I talked about where we just hit resistance, and we're very likely going to get a daily consolidation going on. So daily consolidation means the candle low will be lower than the prior low's candle. So we didn't have that at all on this entire move up from here all the way to here. And now we have daily consolidation on its way. And now the question when we start daily consolidation is the size of its retracement. So there's 2 questions we got to ask ourselves. How steep is this daily consolidation going to be? And if it's not steep, then we're likely going to get higher. So how do we how do we try to increase our probabilities of knowing how steep it's going to be? So we zoom into the hourly time frame on the charts, and we see a quick reversal here, and this is a big enough drop. So this drop was pretty significant, 1.3% within just 3 hours. So now bears have enough room, more than enough room actually, to form an hourly downtrend here, especially in a hourly chart. 1.3% is quite significant. So this exact spot where where I'm drawing right here was exactly where bears should have confirmed the hourly downtrend. This should have broken this prior double bottom right there and confirmed the hourly downtrend. If they broke this 376.09 zone right here, but looks like bulls played defense and bounced. So now we don't even have an hourly downtrend from the bears. So now the question is, how far can the bear get if they don't have an hourly downtrend? And the answer is not very far. So if the bears cannot confirm even an hourly downtrend, their very, very first step for showing us some weakness in the market, then we just continue to believe the bulls. Because you can see this candle right here, this bottom wick at 376.9119. This low was a higher low than this low. So this is an hourly uptrend back to the bulls, but I call this a double top, so it's not confirmed yet. We just came above it in like the last 5 minutes or 10 minutes, so I'm not going to say it's a convinced break above from the bulls yet. And plus, it's a long weekend. We don't have trading on Monday, so anything could have changed right away. We could have a big gap down on Tuesday, big gap up on Tuesday. But this key here, takeaway today, is that bears couldn't even confirm hourly downtrend when they had all the chances they could. Right at this spot, they just had to take it down another like 20 cents. Then we would confirm an hourly downtrend here. And they couldn't even do that. So that means the momentum on the bull side is still there. And we saw money rotation in the market. You can see some sectors was green. For example, the semiconductor sector was green, while QQQ was slightly red. The only thing that was more red on the market was Broadcom, Tesla, and a couple of big names that was holding it down. Other than that, there was a lot of greens on the market as well. So it wasn't like a fear day where money was leaving the market. You guys know we're talking about rotations all the time. So yeah, so there wasn't any huge red flags for me today. And after this morning drop, I wasn't expecting any fireworks anymore because lower volume and a holiday. So now going into next week, I'll be watching to see if bears can confirm that hourly downtrend. And if they do, then I will look for a little bit more of a retracement. Probably come back to 375 or this Thursday's high right here, around this 372 zone. More just a consolidation, no big deal, and see if we continue. And if we continue to pull back more and get a daily downtrend, then that would start to ship up a red flag. As of now, we don't even have an hourly downtrend, so no signs of any concerns from the bulls. All right, let's take a look at the Sp500. Pretty similar. So we hit the resistance and then came back to it. Pretty much testing this this range where there's a lot of volume. You guys know where I talk about the more volume in one area, the more resistance is going to be. So everybody that bought here will probably want to get out, break even when you come back to it. So a slight rejection. It's very normal after a 4.2% move on the S&P 500. And we are also shaping up a daily consolidation. See, the candle went below yesterday's candle. And you look at the hourly as well. Same thing for the bears. This candle should have been the candle that confirmed the hourly downtrend, but they couldn't, and we made a hourly higher low, meaning lower than this high. So that's the hourly uptrend confirmed. So S&P actually confirmed an hourly uptrend. You can see this is a lot more clear than the QQQ, where QQQ closed right there with this candle. So this is initial move. This is the pivot set. I mean, this low is higher than this low, and this high is higher than this prior high. So that's the hourly uptrend confirmed on SPY. QQQ. Right, see? This high, it's the same high as this high. Because it's only a couple cents away, I'm going to call that a double top, so that's not a break. While S&P broke above, and it's over here. So SPY, looking good. So as long as SPY and QQ have money rotating around between each other, there's no red flags for me at the moment. And if we confirm an hourly downtrend today right here, then the most likely scenario for next week, I would have said, is we're probably going to get a little bit more downside, a little more continuation. As of now, SPY actually confirmed an hourly uptrend, while QQQ almost did and negated that hourly downtrend. So the most likely scenario next week is probably head higher and chop around this range, unless bears show us some strong momentum in early pre-market on Tuesday. We'll see about that. Or if we get any news over the weekend, right? Nobody knows anything. None of us can predict with any kind of news. So Tesla today got news on them reducing car prices. So this is more of a fundamental drop than a technical. And we still have a lot of room. So you guys know I talk about where we have big enough bounces where when we have weakness, we still have room to go higher. So this was a 14% move bounce from the prior pivot. Initial bounce is the pivot set. Continuation of the daily uptrend. Now it's a big drop, but we're still above the prior pivot. And we bounce off the 12 EMA. So we can say potentially that could mark the bottom, but I wouldn't bet my house on it because this move is still close at the low of its day, and there can be potentially more downside on that, even though we did bounce off the 12 EMA. I mean, we pretty much bounced out of a 12 million right here at the end of the day, and then we ran out of time. So I mean, it could definitely bounce on Tuesday, but based on what the chart is right now at the moment, this much momentum on the downside and closing at close to the low of its day, it's probably more a little bit more downside to go. So, but this is the spot. So that some bulls would want to get in for the bounce. So if you're one of those bulls that got in, I would set a stop loss below low of its day. If we do get lower, we're probably coming back down to this 240 zone to test this prior resistance. Now it's going to act as strong support right there. So see if we get more downside. All right, Nvidia. Relative weaker today. It's probably because of Broadcom's earnings report yesterday was, even though they beat, they didn't beat too much. So, and the guided was okay. So, also say it would be more technical as well. Technical because Broadcom's earning really doesn't matter to Nvidia because Nvidia already reported its earning and it has a stellar earnings report. So usually ones that already reported earnings and is also really close to the other earnings won't really get affected that much on when its peers have bad earnings. That's why I can see most of the actually other semiconductor stocks were green today. And while ABGO, Broadcom, was red from its earnings. But so I'll say this is more of a technical than a fundamental because Nvidia doesn't care about Broadcom's earnings. It already did really, really well on its own earnings. Because we couldn't get above this triple top, which coincides with the 500 roughly psychological resistance, as well as the 449.27, pretty close. That's the $500 psychological resistance, and over for 3 days. Very clear. You can see right here. Same thing yesterday. Tried another 4 times yesterday. Same thing. Tried again this morning. Right when we market open. So we tried it again this time in the morning, and a rejection. I get it. QQQ was weak as well. QQQ did the same thing. Open high and went straight lower. But you can see the relative weakness from Nvidia. We dropped 3%, while QQQ was down like 0.3. So you can see the relative weakness because we couldn't get over a strong resistance level. So you guys know I always talk about relative weakness and relative strength. When we hit a support and resistance, it flips. So we had relative strength here for the last couple of days until we hit this $500 mark and we switched to relative weaker. And now we'll see if bulls can hold that higher low, meaning higher than the prior pivot low, and potentially let the 12 EMA catch up a little bit and maybe bounce at this 480 zone. Next week, this teal looking line will be a little bit higher, and which would coincide with this 480 zone. And if we do bounce off of that, we can potentially test this 500 again, and it will look more like a ascending triangle, meaning every time it dips, its low of the candle is always higher than the prior low. See? Higher than the prior low, higher than the prior low. And if this one bounces here, it'll be higher than the prior low. And we may come back up and form that. It's like an ascending triangle. Its top is the same, but its lows are always higher. The psychology of that is meaning every time it dips, the bulls want to buy at a more expensive price. It's more of a psychological ascending triangle. Because bulls buy here, bounce, now it dips, right? They're buying it at a more expensive price here. Same thing, bounces then dips. They're buying at a more expensive price than this prior pivot. Same thing over here. So if it keeps on forming that ascending triangle, we may get a good chance to test that 500 again. We'll see if it actually shapes up that bounce. As of now, today is definitely relatively weaker. All right, Apple. Apple yesterday, we talked about where there's a seller. Some of these mega cap tech stocks all had a seller at the end of its day, and I said it was no big deal, even though we had that because of that seller, we had an upper wick form on the daily chart. But I mentioned that we were bouncing off the 12 EMA, the teal looking line, even just on the hourly this entire time. Then there's no red flags for you even short-term traders. You just follow that 12 EMA until it breaks. And we grind it up again today, pretty much around the spot. So no red flags for me on Apple at all. It's just been grinding this 12 EMA ever since its bounce in that V shape. So even short-term bulls are very comfortable, very, very comfortable. I think no bulls are not happy at the moment after this significant bounce, 10.5% of one of the biggest stocks in the market. So that's very significant. For a $3 trillion stock, 10% bounce is 300 billion. So that is quite a significant bounce. And we are pretty close to filling the gap. So we might actually come up to 180. So after a 1, 2, 3, 4, 5, 6 days of green, and then if we get another day of green to 190, we're probably going to pull back. So probably something like, how every time we move, there's a little bit of pullback. There's a little bit of pullback to form the higher low pivots. That's probably what we're going to get when we come to 190. Let's say when Tuesday we gap up 190, you'll probably just sell off. And then, we get something like this at 1.1 or 2% sell off just to form that higher low or consolidate here around this level or go sideways a little bit and then head higher. Because of now, there's no signs of red flags in the market. Who knows, right? We may come up to 190 and then boom, next thing you know, we're up at 197. Let's say QQQ. This was it. This was the higher low being set for the consolidation. It was just the most shallow daily consolidation any of us could have ever expected. Just this one little blip, right? And then we head higher. Then obviously Apple is probably going to do the same thing, right? So we have to see about that. But if Apple gaps up on Tuesday and starts to pull back a little bit, then we'll see QQQ pull back a little bit more to its prior support. So those are two scenarios that I will be looking at: up or just straight shot up to 190, pull back, or we go boom, come up to test all-time highs. We'll see about that. All right, Amazon. So Amazon today is just taking a chill day, pretty much exactly following QQ. So no, nothing too crazy here, other than its last candle was relative strength. So this is an hourly bear flag. See, okay, I'll measure it for you guys. So from top of the move to the bottom of the drop, right? So this is A, this is B. So every time the opposition move doesn't get over 0.380, which is 38.2% of the opposition move. So this is a 100% drop. Sorry, not 100% drop, but the move is 100%, and the opposition bounce is bouncing 38.2% of the prior move. And if we don't get over that, that means it's an hourly bear flag. And we are trading down here, low 23.6%. That was actually for me a pretty textbook looking bear flag. And you can see that every time we bounce, we're just chopping within it. So a lot of bears are probably expecting a bear break on that bear flag. And the clue that we got when it broke above this top here, you can see bull volume just came in and straight shot up because they negated that bear flag. And when you have one side that lacks follow through, guess what happens? I always talk about this. So if one side have a lacking follow through negates the bear flag, that means the opposition side is going to come in and scoop up those other side's shares. If bears aren't serious about taking it down, then guess what? Bulls are going to come back and buy at the end of the day. So this last candle actually is relative strength compared to QQQ, but it's just 1 hour end of the day. So no biggies for me, but Amazon chart still looking decent. Although it's not in a daily uptrend, so this is the only one that's on a daily uptrend. But yesterday I talked about where we have a big enough bounce where it can easily shape up a daily uptrend now. So even if it pullbacks 2%, 3%, we still have room for the bulls to work with to go up to that daily uptrend, break above the prior top, because it is a 7% bounce. Yeah, no signs of red flags at the moment, even on the hourly, because bulls negated the hourly bear flag at the end of the day. Yeah, so looks good. All right, let's take a look at Google. And we might actually shape out that chop zone that I talked about yesterday. But we'll see, because Google, I mean, it's similar, very flat today at QQ. You guys know where I talked about the chop zones for Google, where we just chop every time we get to a new level. So Google comes up, makes a breakout, and then we chop around a zone. Breaks out, chops around a zone for a very long time. Breaks out, chops around the zone for a very long time. And now we have another break above. So we may actually chop in this zone and above the prior zone's low for some time. We'll see about that, because we actually will need more data for that, because we just broke above the zone and we need to see some sideways action before we can say it's a definite. But based on its price action history, we can say it may potentially happen. But this dip, very similar to QQ, where it just formed a consolidation and it's very shallow still. So no signs of red flags. You can see this is still also forming an hourly bear flag like that. And Amazon at the end of the day negated the bear flag and went above. You can see Google is still in the bear flag territory. So, Tuesday, we'll see where this flag is going to break. We get it one green candle back above these three prior candles, and bulls have negated the bear flag. But if we get break below this, then it's a confirmed hourly bear flag. We'll see. If we get a confirmed hourly bear flag, then I'm looking back down to this 133, which is the prior chop zone's high, and that will act as support. Yeah, as of now, no huge red flags at the moment for me on the daily chart. Very healthy. And we still don't have an hourly downtrend yet. So, but if that bear flag confirms, then we have an hourly downtrend. But as of now, we don't want to be guessing, but we can say, we'll know when it breaks. It's not even that far away. It's like a 0.6%. So we'll know very quick if it does break bear. Right, Microsoft just can't get above its resistance. It's I understand it's a flat day today, but it went above it and then came back down. Just like, been doing that every day. Above, down, and still not over the Thursday's high. And still has not confirmed its daily uptrend. I don't know what it's waiting for, but it looks like a little bit like a megaphone. Let's take a look here. So megaphones are tendencies of where it breaks above a prior high, and then lacks follow through. Does look like a slightly megaphone, but the bottom part is not. It's technically a little bit stronger on the bull side, but the bear side. So megaphones are looks like a megaphone, so it means that it's lacking follow through on both sides when it breaks. Bull break, you see this break is about higher than its prior high, lacks follow through, straight shot down. Bear break, meaning this low is lower than the prior low, lacks follow through, rebounds. Bull break, this high is higher than this high, lacks follow through. Bear breaks and just keep lacking follow through on each side. So it gets very frustrating for both bulls and the bears. And then you get another one here. This high breaks above this high, straight shot down, lacks follow through. So, and then you can see this low is lower than this low. And then, some people short or go long when it breaks a resistance or support. If you were like, oh my gosh, it broke, gets in long here, right? Next thing you know, you're like, dang, you're in the red in like the next 30 minutes. And then the bears who are waiting to short once it breaks that support, right? You get in here, right here, and you short because it broke this low, and then it just bounced right away. You're red. So that's why it's so frustrating for megaphones from both bear and the bull side. So I guess we'll just look at until this megaphone decides to break, but it's getting really wide. As the wider it gets, the less likelihood that it's going to continue to do that. Because what are the chances that it's going to go up 1.4%, right? Let's say it goes up here, we bounce again, 1.4%, and then it decides to drop another 2% for that megaphone. It's pretty rare. I would say if Microsoft goes up here and then it comes back all the way down here with 2%. And the wider it gets, it needs more percent for it to form that megaphone. After it widens, it gets less and less probable. And because inside this is a lot easier to chop within, a smaller percentage. And that is what the psychology of it is for megaphones. And so I want to see Microsoft break above this 330 and then close above 330. Has it like a green candle close above the zone for us to potentially test that Thursday high. Otherwise, it's not really going anywhere at the moment. So we get to close above 330, then we're going to come test this Thursday, August high. That'll be 332, 333 actually. To be back. Hi, be watching, and that megaphone as well will be our short-term guide. See which way it wants to finally break out of. Right, Meta. Okay, Meta is also giving us a little bit of a megaphone vibe. Let me see here. Because it's just broke above as well and it's lacking follow through. So that 300 psychological support and resistance zone is very crucial. We've been talking about that zone for a couple of times. But, and I talked about this the last couple of days where even though we did reject from this 200 and 299 zone a couple of times already, multiple times, I said that bulls are still okay because we are closing in the top of its zone. That means is that it's not really a hard rejection. A hard rejection would be, let's say we come up to here, 300, and the next thing we know, we low blow through it, and now we're closing at the low of its range. So this is top of the range of the resistance, and this is the support, right? Our most recent support. Now we're still closer to resistance than we are closer to support. That means every time it rejects, there's still bulls playing defense down here that wants Meta to go over 300. So if we keep on playing defense here and bounce up here, eventually $300 level supplies would be gone. There would just be no more sellers because every time we come up, the bulls buy, reject. There'll be sellers trying to sell. Eventually, run out of sellers, and then we'll head higher. Obviously, the other scenario is bulls get too tired trying to play defense here, and there's just too much seller in the zone, and then we get a big rejection coming back down to this 289 zone. So currently, it's favoring the bulls because we are bouncing off of this 12 EMA support every time we come down to it, and we're closer to the 300 zone for a retest of the resistance again. So it's currently favoring the bulls, but we're not still out of the woods yet because you're not over 300 yet. And we actually got over it twice, and now that's why it's looking like a megaphone. So what I want to see is us close above it. So I want to see the daily candle close above 300 for us to say we have finally gotten over it. So we'll see on Tuesday we can get over that. And if we do, then Meta would be solid. So this is also a daily uptrend, confirming with slight lacking follow through because we broke above Thursday's high. I don't want to write it off yet, as I've said, because we're still close to the resistance. So we'll see if it can show some strength into next week. Because today QQQ was very flat. So all the mega cap tags were pretty flat as well. And it was a gap up flush in the morning. We'll see about that on Tuesday. All right, that's all I got for you guys. And I will do the commodities video tomorrow morning. And yeah, all likes, shares, and subscribes are always appreciated. And feel free to support the channel. And I will see you guys over the weekend. Have a great rest of you guys' weekend.